Ladies and gentlemen of the crypto space, we're live on a Wednesday, August 28th at 11:44 a.m. So, obviously, it's a very common topic of conversation, path versus destination, but it's one of the most important things to understand, especially the way we feel, which is everything with regard to how we engage with markets. Markets will drive you nuts, but let's give you a couple of statements that can potentially help you in navigating markets. Um, First and foremost, where are we? Where have we come from? So it's imperative to understand everything in reality, yes, is an RPG, a role-playing game, which is a manifestation of geopolitical will, which is expressed in terms of currency systems. So yes, you could obviously reduce everything to energy because currency is really a derivative thereof, or rather the valuation of currency is a derivative thereof. But so yes, you could look at oil. You can look at the oil prices and whatnot, and oil relative to currency valuations is critical to understanding behind the scenes of maybe a little bit of geopolitical strategy. But from a higher, slightly higher level perspective, you can just inspect relative currency valuations, which kind of distills down, the geopolitical effects that energy prices has on currency valuations, basically the relationships between countries. So where are we and where have we come from? Look at this chart. This chart tells you what you've been through, where you were, and up at the 113 value, 114, this long leg down and this sideways chop going on literally 2 years now at this point. Bottom here was in February of 23 last year. Break up, break down, break up. This is literally a horizontal chop between one heck of a range, 100 to 106. This tells you everything, and this manifests itself in the great uncertainty that everyone feels in markets. And the most important takeaway is correlation and inverse correlation. So what you want to see is an inverse correlation between this chart and right down the pipe of crypto markets, Bitcoin price. Because in many regards, the Bitcoin price is what I just described with regard to currency and energy with regard to Bitcoin versus crypto markets at large. So when you see the Bitcoin price up because of dollar depreciating relative to other currencies, that is what I would argue is the most interesting time. And there's a variety of reasons why that will be the most interesting time in markets. That's because when the dollar comes down in price relative to foreign currencies, that means foreign currencies have more purchasing power. That creates a variety of distortions, domestic inflation in respective currencies, nation states, because their stronger currency needs to import. It has a very deleterious effect on import and export pricing and valuations. When your currency is strong, you could import cheaply. When your currency is weak and other currencies are getting strong, your imports get more expensive. Because if you have a dollar and a euro is at a dollar, but then that euro goes to $1.20 in dollar terms, it is now 20% more expensive to import anything that is valued in euros, denominated in euros. Cross-currency valuations literally mean everything with regard to capital flows. So that's why this chart is such a very meaningful chart, literally to your life. It tells you where interests are. It tells you geopolitical strategy and relationships between countries. It tells you where capital really is going to flow around the world. And sure, we could break down, we could break up. The chart tells a story. It's not hopes and dreams that tell us whether this is going to go down or going to go up. Clearly, it's a manifestation of geopolitical collusion. We understand that, but we must respect that the chart tells us what they are trying to collude, what they're trying to produce with regard to the relationships and conversations between nation states. Now, we're not at the point where there's like an invalidation of this horizontal chop. We are at the point where there's an invalidation of higher lows, at least temporary, because clearly there's the old fake out breakout pattern where it breaks down, finds support, and rips to the upside, and before you know it, you're at 150. There's no way to know. There's no way to know that that would occur, but lower lows and lower highs express directionality, of which we clearly don't have that. We're looking at a daily chart. Why is the captain looking at daily charts? Because I want to drive myself insane. Structurally, the destination, which we talk about all the time, is best inspected monthly chart, monthly, 6-month, yearly chart. But how much could we talk about that? We know the destination, and it's something I don't need to rehash over and over again. And for that, you go to the yearly chart, and it looks great. Obviously, it's a mess, but the yearly chart tells us many things about where we're heading over the next decade. But that doesn't tell us what's happening today. That doesn't tell us what may occur today. And right now, the market is filled with the uncertainty of a strong dollar bounce, because the dollar has weakened significantly since June of 2024. You're talking 6 points on 106. Those are meaningful numbers. So we saw a bounce in crypto this morning. Bitcoin was over 60 again. And unfortunately, that was against the backdrop of dollar appreciating versus foreign currencies. And that is not what we want to see. I mean, clearly, relative to June of 24, there's been significant dollar depreciation, and Bitcoin has held up well. It's not like it had, I mean, it did go from like 52, 53, bottomed, and then it regained strength. So I guess the statement or the thought that I'm trying to have an experiment with is, have we re-entered the inverse correlation where this chart goes down and crypto goes up, or are we still in an environment where the dollar is getting stronger and crypto is getting stronger? And that, my friends, is not the environment we want to see. That means we are not there yet. That means the bull market, as people like to call it, has not started yet. Why do we know that the bull market starts when the dollar is depreciating versus foreign currencies and crypto goes up? Because of past precedents. Now, bear in mind, this obviously could be invalidated, but I generally think that's not the case because of very simple observations of the structure of the world and the structure of financials. So if you recall yesterday, I did show you where the crypto bull markets were. Let's go to the 6-month to get a little bit more granularity. Your crypto bull markets are here against the backdrop of very meaningful dollar depreciation. So what if that's not the case? Because there have been, over the last 4 years, significant invalidations of historic trends. And as you see on the 10-year, that significant trend is clear as day as being violated. Lower high after lower high after lower high since 1980, it's really 1981. And now we finally have a higher high and a break of this pattern. Now, obviously, trends are the weakest of the technical indicators to look at. Levels most important, moving averages, and then trends are what I argue is the sequence to be considered. Smacked right into the 200 SMA on the 6-month chart. On the yearly, it's a 100 as a ceiling. So there's clearly an invalidation here of structure, and that is what's most meaningful from a technical perspective, because everyone's looking at these charts. Every trader and investor is looking at the structure of the system. And this is an invalidation of historic norms. That means normalcy will change. What people do, how people behave is changing. And that causes significant disruption. This is the first structural change to the system since 1981 with regard to collateral flows and probably currency pricing, cross-currency pricing, because what is currency? It's really a manifestation of collateral. And the global collateral is sovereign debt. That's the structure of the system. So the question does go on in my mind if the next bull market is correlated with the dollar bull market, and clearly that'd be weird in terms of what we've most recently experienced over the last 8 years, or do we return to a normalcy with regard to dollar depreciation being the backdrop of a crypto bull market? In either case, one, we'll see, and two, where is my mind? What am I thinking? I'm inclined to think it's still the case that relative dollar depreciation is the backdrop for a crypto bull market. Because as the dollar comes down in value, foreign currencies are getting stronger, more purchasing power, which implies, or it must be understood, that there is so much more foreign currency than dollars. Just boatloads more foreign currency than dollars. And appreciation begets appreciation. Capital flow begets capital flow, and we call that momentum. So as capital starts flowing outside of the United States into emerging markets, currencies are strengthening, foreign equity indices are strengthening, foreign government debt is strengthening, foreign investments are increasing, and that occurs cyclically. Capital flows in and out and in and out, and that's these cross-border capital flows that we talk about so often. So it makes much more sense that even no matter what we really think, or what we may speculate may be invalidated or not, that crypto bull markets are against the backdrop of dollar depreciation, relative dollar depreciation. I do not necessarily expect that to be invalidated because of what I just described with regard to cyclicality, momentum, and foreign currency valuations. It just makes sense. Very simple causality that leads us to that conclusion. So in that regard, everything we've been saying structurally about a long-term chart, high time frame chart of the dollar, implies it's getting closer and closer because we've come off incredible high time frame technicals with the largest shooting star since 1985. And now 1, 2 candles, yearly candles of continued downside. So the most previous candle implies a start of confluence, suggesting the shooting star was meaningful. Now it's a start of confluence, which is hard. It takes time because this is a high time frame, 1 year per candle. So that's why I look forward to the entirety of the rest of the year. I look forward to January 1st, 2025, because if this next candle is a lower low, that just contributes to confluence. Now bear in mind, that's a pretty large wick. Inverted hammer, so that could indicate directionality reversal back to the upside. There's always uncertainty, but that is one monstrous shooting star, and we know that geopolitical powers probably want to devalue the dollar to a degree because of what it implies with the capacity of the rest of the world to finance sovereign debt obligations, as well as trade pressures. We know that globalization wants to come down. That's decelerating. We know that the powers that be want to repatriate supply chains to the United States, and in order to do that, the dollar needs to be significantly weaker relative to foreign currencies. So that's probably the backdrop of backdrops to really give us a signpost of more likely than less likely of what's going to play out is probably dollar depreciation over a fair amount or a fair time horizon over the next decade. I mean, very simple structure here. If I could actually get a line to draw and plot, thank you, line. I don't want to drag you. I want to, thank you. Yep, it's not drawing. Draw something. Draw something? Trend line. Okay. Very simple, symmetrical structure here implies we come down to trend. Now, technical voodoo, what is structure? Eh, you know, we'll see, because there's some nice structure in hindsight from the beginning back in 78, and there's tops and bottoms, and you have these levels. And candles matter from a candlestick pattern, and it's too high time frame for an Elliott wave type analysis, but the structure here implies dollar depreciation over the next decade. And that would present what would be a very interesting backdrop for not only crypto appreciation cyclically, but the first secular crypto appreciation, which is what many would title the super cycle. Now, I'm the most realistic investor in the entire crypto space, clearly the most rational, self-appointed investor of the crypto space, and I have enough technical data that suggests this is a reasonable analysis. And what does that mean? For me, at minimum, that means I'm comfortable. It means I have more comfort than ever with regard to high time frame sentiment of where things are heading in the destination, which means the noise of the daily cyclicality is less and less meaningful. It just means less and less, because we know where the powers that be want the system to head. And they want the system to head there because there's very few conditions that allow the system to continue operating according to status quo expectations. And we know that the preservation of normalcy, and we know that the financing of social civility is the unspoken mandate of every regulatory authority and government entity. Bam. Anyhow, that's the thought on my mind this morning. As always, let's see what's on your guys and gals' minds today. Diego's in the house. Good morning, my friend. Nice post the other day. As a heck of a consolidation of a lot of what we've spoken about. A lot of how to really see. So, there's a word hodl. Listen, hodl is inherently irrational. It means just hodl. Just hodl. Why? Why? So I obviously conform with that definition. Hodl. I'm a force hodler because I own locks, which I define as businesses. But I wouldn't define what I do as hodling because it's much more than that. And I know that. It's an entire story, an entire dinner table investing conversation. It's rich and robust, and you have the technical data, and you have the geopolitical conversation about what's going on in the world, and how financials work, how cross-border flows work, how currencies work, how sovereign debt works, how the system works. So I cannot define what I do as hodling, even though literally that's what I do. I buy, I own as cheap as possible, and it does what it does. It's going to be what it's going to be over time. I see the destination clear because I see the chart data today, and I'm able to extrapolate into the future. But I cannot define what I do as hodling because that implies, boom, hodl, shallowness in the capacity to describe the why. And clearly we have entire conversations over years of why. And that's meaningful. So I would argue that that is something other folks should appreciate as well. Always be able to describe the why, and don't just do for the sake of doing. You need to be able to explain it, which takes time to, one, absorb the information, and two, to assimilate the information such that you can regurgitate, hopefully, a derivation of the information. At minimum, you can regurgitate, which is great. That means you're consuming it and you're processing it. But what you really want to do is, over time, assimilate it such that you are making a derivative. You're making your own version of a story, because that story, my friends, is your life. It's everything. Why you do what you do, how you do what you do. What are you thinking? The story of your life is the most meaningful thing. We're living the story of our life, but the capacity to articulate the story of your life in story form is the most important story you could possibly tell. So it's worth every ounce of effort to make it the most rich and deep and informative story you could possibly tell. So that's why I do the stream. This is me telling my story and why I do what I do and how I do what I do. And, and we're all along for the ride. It's a journey. Holy and Holy, good morning. Tap C, hey chat, hey Cap. Cap not wearing his cap. No, I got a haircut, so I figured I'd take the cap off and get less bald this week. Coin and Potas, good morning, Cap. Mike Cap, good morning, Lamas. Always a pleasure. Diego, I was interested in exposure to error, but today I discovered the emissions are greater than revenue. Ramses instead gains more fees than emissions. Complicated conversation. I'm quite fond of Aerodrome, Velodrome. I'm obviously exposed to Velodrome, Ramses, and obviously the other two kingdoms on Linnea and Mantle. We can look at the data, but it's imperative. The reality is, 5 years' time, everything will be different. Everything. Maybe the Coinbase narrative is the biggest damn narrative on the damn planet. And in hindsight, I wish I bought 300 mil market cap Arrow in the size that I have Ramses. Hindsight will be a bitch, and we'll have a great story to talk about in 4, 8, 12-year increments about shoulda, coulda, wouldas. But in the end, we make our choices today. And there's a lot of folks on our Discord that do have exposure to Aerodrome, and that's cool. But I have my sentiment, my opinions, and everyone has to come to their own conclusions and place their own bets and build their own portfolio. And my choice was to not have exposure to Aerodrome. I see Velodrome, and I find it more appealing at its market cap. I wish it was cheaper. We always wish everything is cheaper, because the rule is to buy things as cheap as possible. Now, the Velodrome is doing well. It has maintained its complete valuation from entry, so it's not depreciating. Ramses with rebases is currently sitting at literally my purchase price. Yep, it's literally sitting at my purchase price, but the principal has doubled in size because of the rebases. So my position is twice the size, dollar denominated. I don't know really the significance of that, because obviously there's relative dilution compared to the other locked RAM. So maybe, I still think that relative dilution is interesting, considering the potential for the expansion of business activity that could occur on the Arbitrum network. Great. So, in my opinion, quite content with these positions, and I rarely FOMO. I might feel it. I certainly don't act on it. So I have my thoughts on Aerodrome, but I just can't get the quantity I would want at the price I would want, considering the expansion rate of supply. It's just not possible. I can't get 5 to 10 cents arrow. It's just not going to happen. Therefore, and the reason I want that particular price point is because that's the amount of capital I have. Therefore, I need that price point in order to get the position size I would need for it to be a reasonable position size considering the overall composition of the portfolio. If you can't get the right position size, that's a great way to invalidate taking exposure to something. And, all right, if it's the greatest, if it turns out to be great in the future and you don't own it, that's okay too. You don't have to own everything. And that's generally my sentiment on the topic. Hope that helps, my friend. Pithra's in the house. Hello. Hey, Cap, what are your thoughts on Liquid Driver? Now Abacus merged with eNeed. They hold big DENFTs. Theta Kingdom DEXs offer Liquid Raptors. Yes. Those are convex style protocols that are designed to offer derivatives of cash flow positive positions. I appreciate what they contribute to the structure of the system. My perspective remains, irrespective of how awesome a derivative looks, I want base layer exposure. So everything I own is not liquid. Not liquid driver, but liquid as in a liquid derivative. I don't want something that's liquid. It is critical to the rules of my business that, I've showed you guys briefly. The rules of my business, which is now up to 59 pages. Oh, dear. That it be illiquid. And in a liquid position is historically novel. It did not occur prior to 2020 like it occurs today. So that presents very interesting business structural opportunities. So aside from my desire for base layer exposure because that removes layers of technology, I want the simplicity. It also facilitates a business positioning that I strongly document, which creates very favorable positioning. Creates a stronger argument if it's illiquid, and that's my opinion on the topic, my friend. Sir Joe, present and accounted for. If you're on X or YouTube, please feel welcome to comment about anything. I'm more than happy to talk about any topic. Pithra, 2 of 2 stakers of Liquid Driver, getting 30 to 60%, most real yield with only 3-month lock. Seems like a real undervalued gem. Listen, there's countless things, always. There's plenty. It's an never-ending story of the damn crypto space. There's always some shit that looks good. There's plenty of shit that's undervalued. In the end, what matters is, did we get adequate size and does it work out? And that, 1, takes time, and 2, takes due diligence. So what you're discussing right here is due diligence. And don't jump to conclusions. 2, and 3, undervalued gem. The greatest technology isn't necessarily the greatest investment. Always remember. And undervalued gem is subjective. There's no way to make it. One objective statement is 30 to 60%. Clearly, then there's more objective conclusions that could be made, like what's the capacity for dilution, what is the demand, what network expense. There's plenty of objective observations. So just always remember to compartmentalize objective observations, quantitative measurements and values and data as compared to sentiment. It's imperative to not act on sentiment. And to me, the most important thing is position size, because that really invalidates so much. And obviously, I think of total addressable market. That's such a cliche. The TAM. The TAM is the whole fucking planet, really. But things like that, you can be a little bit granular, like what's the total addressable market of, Cosmos hubs, some obscure Cosmos hub versus like optimism versus Arbitrum and base. Clearly, that was basically in linear order. There's much more addressable market at base because Coinbase connection. Optimism is trailing Arbitrum. Arbitrum is trailing base. Arbitrum is in the superchain, so there's something there that it's garnering attention. And clearly, Cosmos hubs are trailing everything. And then the list goes on and on with the networks. Solana has meme coin frenzy, but it doesn't have the same strong foundation, the sentiment that you feel when you're operating on a mainnet. So there's something there, and these are much more like quantitative observations and not really anecdotal. You can put data against literally the things I said. And we can look at DeFi Llama, and we can see volume, activity, and you can make further deductions like how much collateral, how much lending is going on Solana versus mainnet. And those are very meaningful because credit is a risk, which means if there's more credit, people have perceived less risk. And that's literally why mainnet has the amount of capital it does. Not here. This chart on stables is really an expression of risk. So on Ethereum, there's $83 billion, which is actually up nicely. Positive sum environment. You remember in 22 and 23, the entire talk of the town was negative sum, marginally negative sum, zero sum. We're finally in a damn positive sum environment. Everything aside from mainnet and Tron, for that matter, which is 60 bill, whole nother story over there, is in single-digit billions. That's very meaningful. That tells a lot. Hope that helps. Teddy, two pools now control 50% of BTC hash rate. How concerning is that in your opinion? Certainly quite concerning. So the thought there is exposure and diversification, and is there an alternative? And that is something that we all must think about. And I would say that clearly does not invalidate exposure. Bitcoin we're talking about here. So there's always these things, these fears and these uncertainties that we contemplate day in, day out. So it is quite concerning. But that does not invalidate the conclusion that I should have exposure, of which I retain the exposure that I do. I have no immediate plans to increase exposure, and I have my plans for the entire bull market, and I have it literally solidified. Every action when shit starts popping off, I have rigorously refined the behavior that I'm going to engage. It's going to be the most, and I said this back in 22 and 23. The next bull market, it's going to be feet up, watching all the insanity unfold. I will have nothing to buy. I am buffeting the crap out of this. You do not buy on the way up. You do not invest on the way up. Fine. Buying, selling, trading. It's a whole technical skill. That's cool, and we may engage in such activity. Show me a massive 3-month consolidation on ascending triangle and in a raging bull market, fine. We may take advantage of that from a capital gains perspective. But aside from that, capital gains is not an investment. It's a behavior. It's a productive behavior. It's a work. It's a labor. From an investing standpoint, what to own, you do not buy anything on the way up. You do not lock anything on the way up. And fortunately, we're a very ultra-minority community, which implies tens of thousands and probably hundreds of thousands of people around the world are going to do just that. which will benefit us, the people that did it earlier. And that's great. And everyone will have their journey and their experience, and not everyone could hear my story and my rules of the road, the unwritten rules of the road, as George Carlin said. And that's okay. And that's basically my plan of action. There is no buying in this bull market that hasn't started yet. There is only watching and enjoying the fruits of what we've done over the last 2 years. There's nothing to do. The bull market is for capitalization. The bull market's not for acquisition. The bear market is, and the bottom of the bear market is, which is why next time when things are absolutely collapsing, 26, 27, we will know much more significant technical indicators. We are much better prepared to buy at more favorable prices, more favorable discounts, cheaper valuations. Because now we have more history to go on, more technical data, more precedents. And that, my friends, I cannot understate. I am very much looking forward to the next 4 years and the next bear market. Oh, folks ask, are we in a bear market? Are we in a bull market? You could broadly categorize next bear market as when global liquidity starts to dry up, and you will see that in the move indicator where collateral is blowing up and the dollar's spiking. It's when the dollar bottoms, and you'll see plenty of other technical data that we'll be looking at to find the top in the market. But that's why I don't want to time tops, and I want to buy as cheap as possible. So I want to understand where bottom is. You don't need bottom. You understand where bottom is. And top, I don't give a shit because I'm not buying shit on the way up. I'm not investing on the way up, so I don't care where top is. We own these businesses. We own these things that offer claim buttons, that have this productive capacity, that offer fintech products and services. So what am I doing this bear market? Claim, 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 stack cash, 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 cash. Sounds very Buffety. Maybe the new age crypto Buffett style. Cash, 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 cash. Bull market pops. You're sitting on a pile of cash. Everything crashes. You're looking at the technical indicators looking for where bottom is, looking for something that's mispriced, undervalued, and you pick it up there cheap, in an appropriate size because you stack cash the entire bull market. And as Buffett would say, rinse and repeat with significant patience. Over 4, 8, 12 years, your portfolio will grow cyclically, contract cyclically, and the system will expand, which means your portfolio will experience higher low, higher high, higher low, higher high. Et voila. A refined and optimized methodology that is sustainable. Now, the only thing left is to cure is the insanity and the emotions associated with what is typically present in financial activity, is that anxiety that I gotta make it, I gotta do something, I gotta ape in, I gotta get it now, that FOMO, but it's really just anxiety and fear all wrapped into one. So what you need to do is kill it. You need to kill that. It's a poison. And it's completely irrelevant to capital management. You know, folks always say that. Like, I remember when I was younger, and you would be on social media, emotions have no business. And it's not until you get older, it's not until you've gone through market cycles that you could say that and really understand it. And such that you could refine business procedures to be rigorously executed without hesitation. This is what I'm going to do. Oh, and the market's going to market. How about them apples? Hope that helps. Joe, Morning Cap, much a pleasure. Raul, Pithra, always appreciate your time, expertise, and insights. Thank you, sir. Much a pleasure. If you're on X or YouTube, throw some comments if you want the conversation to continue. Otherwise, we may have a short stream today. I do got work back at the office. John Doe, seeing a lot of real estate bubble doomers post on the timeline. Any thoughts? It's not about bubble doomers. The real estate market is fucked. What's important to understand is what is a crash, and a crash isn't a crash that everyone thinks it is. So, commercial real estate is fucked. Frankly, residential real estate is fucked as well. Um, and what does that mean? That means someone's taking losses. They're going to be selling cheaper than what they purchased at. That's going to be upsetting to people that bought at really expensive prices. You know, folks bought homes not at the cheapest price possible. They bought homes as investments. Yeah, real estate's a shit way to invest. Whoopie-doo, you buy a $700,000 home and you're making 4%, 5% on the money. Fine. You tax optimize and you're making 10, 12% on the money. Bam, tenant out for 3 months. Oh, that screws up everything. Bam, tenant squats for 6 months. Oh, that really screws up anything. Bam, tenant has to get out of the property because water leak and it takes 3 months to repair and do the sheetrock and maybe they got to jackhammer through the damn foundation to get the pipes of them that some schmuck contractor put under the foundation. Yeah, because that's what they do. Real estate sucks. And clearly, of course, it works for many, meaning you have 100 units and you got 20 mil in the bank, and fine, 12%, you're marginally adding to the cash flow. So great, that works. But so much of this Airbnb shit and people thinking they could start, no, it's the shittiest thing to invest in. Where's the growth? Where's the excitement? Where's the potential for, like, my multifamily home to be rented across the planet? I want to operate a fucking business that has global scale and scope. Now that's freaking exciting. That's why I am still so passionate about these particular investments that I have chosen over the last years. It's the most exciting investment opportunity I could possibly think of. I don't get that kind of reaction when I think about some stupid equity, which is just a piece of paper that's been shit out of a corporation for a capital raise. Here's your 5% dividends. Please, may I have some more? Fucking bullshit corporate equities. What a scam. It's a way to dump on retail. Clearly. Clearly concentration of capital and the capacity, which manifests from the capacity to trade, works in all markets. Had a friend this morning talking on Telegram, RT, saying, I'll trade anything with a ticker. I'm like, my man, you gotta have some standards there. But I really got a kick out of that. He said, I'll trade anything with a ticker, bro. I'm like, yeah, fine, fair enough, fair enough. That's concentration of capital, where the few take capital from the many. So if you are consistently making money in trading, that means clearly you're taking money from other persons that are, by logical extension, losing money. And that's fine, fair enough. Predators and prey and that old biology stories I used to talk about the markets. It's very Darwinian, survival of the fittest. And that's great if you excel at it. You have to choose who you are and who you want to be. Do you want to be a predator? You certainly don't want to be prey, so that's probably good advice too. You shouldn't be trading if you're losing money. And frankly, investing, which is owning, which, as Diego said yesterday in his X post, you can't do in the stock market anymore. It's just check back in 20 years for whatever the fuck you're able to achieve, and it's bullshit. If you look at the S&P denominated in gold, probably should have just owned gold. S&P's gone nowhere. It's useless. Dog shit equities. What do I call it? Pig shit equities. Look at the S&P denominated in gold. Everyone looks at this chart like, oh my God, the S&P. Then you go like this, and you no, not God. S&P denominated in God. Oh dear, what have I done? The S&P denominated in gold has literally gone absolutely nowhere. And clearly you had 2008, which finally bottomed in, 2011. But in 2026, 7, I don't know, we're in 24. You're talking about tops. All right, fine, 24 years since dot-com bubble. We're not even close. Not even close. Look at this chart. This chart is insane. This chart says the entire equities market is stupid as an investment landscape. Now, NASDAQ performs better. So, in fairness, let's look at NASDAQ. So, that's closer. It's much closer. Did this stick? No, it didn't stick. Oh, look, I just did it again. But in fairness, it's NASDAQ and tech are outperforming S&P, gold denominated. But then clearly you go over to Bitcoin. Oh, so if you if you do Nasdaq or the S&P denominated in Bitcoin, it's worthless. Like all that Nasdaq outperformance, worthless. It means it's uninvestable. The entire equities markets are relatively uninvestable. It is what it is, and that is just unambiguous in the data. And they're not even consider Bitcoin an investment nowadays. It's way past, the opportunities of the cheaper prices. And clearly you could go to disgusting valuations depending on how perverted the global monetization gets over the coming decades. But still, it's not productive. I mean, this is what like the hedge funds that didn't want to take on the Bitcoin ETFs were talking about. I forget which particular fund was talking about it. But there's no productivity, there's no revenue, there's no cash flow because the boomers and the old people want cash flow. And frankly, so do I as a millennial. I want something that I don't have to sell. I want something that I could be passionate about and talk about and understand and tell stories about. And that is not Bitcoin. That doesn't mean you don't own Bitcoin. And this plays into portfolio composition and balance, structure of what you build. Because Bitcoin is the cash component, as we talk about. It's a collateralizable cash equivalent, freaking volatile cash equivalent. But then again, 10-year will hijack this chart. It's a pretty volatile cash equivalent, but so is. I don't want to adjust for dividends. How do I turn that off? All right, it's on. But still, look at the drawdown on TLT, which is 10 years right up the pipe. Oh, 20 year. Well, it's TLT. Okay, point being, drawdown on TLT since the top in 20 is it's currently sitting at 40%. That's pretty damn volatile cash equivalent. Collateralizable cash equivalent. Remarkable, frankly extraordinary that it breached that time weighted average price for the first time since inception. So U.S. government debt is not what it used to be, making Bitcoin seem all that much more interesting as a collateralizable cash equivalent. Go figure. I will call you back. Decline. I got another one over here. All right, fine. That's fine. All right. I hope that helps. So back to the topic, actually. It's interesting. So there's reason to be a doomer. And frankly, I agree with the content. For instance, my sentiment, all the condos in Florida, especially on the coast, that require all those, what do they call them? The, not rep, a portion, appeasement, whatever the fee is that the condo's charging to do the repairs that are mandated by regulations now. And you're seeing insane number differences. You're seeing $1 million apartments going for $400,000 or $500,000 with a $200,000. You have to pay $200,000 right to the board for HOA fees the second you get the apartment, and then you're coming up with $2,500 a month HOA fees. So it's crazy. The structure of the system is changing. And you're going to see that happen in neighborhoods as well, probably very insurance driven. If your insurance doubles or triples, oh my God, that's going to crater the valuations of properties. Then you can have your bubbles. Frankly, something like my neighborhood is a relative bubble. I saw a 40% price cut on a house down the block, and that 40% price cut is 60% higher than what I acquired back in 2018. So they cut 40%, but that the comps, as they call it in real estate, is at a 60% premium than what I acquired in 2018. So I'm like, all right, great. You're taking a fucking fat price cut, and it's still an absolutely insane number as compared to my acquisition cost. So I'm just going to sit back and actually do with real estate what a normal human being is supposed to do, is you live in it. So you got your primary residence, maybe you do well and you get, grab an apartment on the beach, cool. It's your damn home. Stop trying to Airbnb every freaking thing you could find. What kind of insanity has come upon the population? At least if there was more rational investors, they'd realize investing in real estate is stupid. Investing in the stock market is stupid. Investing in globally accessible, permissionless banks that you actually own, that you're not getting fucked over by shareholders and white pasty boards, is a good investment. You're like, then maybe we'd actually be a little bit more appreciating in these crypto markets. Number would be going up a little bit better if people were more rational. But such is the case, they're not more rational. So we must endure the reality that society at large is not rational. All right, it is what it is. And they'll do exactly, by they I mean society at large, they'll do exactly what they always do. They'll see the number go up, and they'll be like, oh, hey, Joe, this shit's popping off. It's up 50%. Maybe we should get a piece. And we're like, bro, it's already at 50%. Are you insane? And we're like, all right, we owned it when it was 400% cheaper. So they'll FOMO in and do all the shit they always do with these crypto markets, and that's why you get the insane bull market. So all you need is the conditions, the trifecta of bullish confluence. Dollar down, move down, 10-year plus government debt, U.S. government debt, up, yields down. Just so happens, rate cuts are next month, and into the end of the year, we get our yearly candle on the DXY, and we want a lower low. I mean, all the confluence is lining up, ladies and gentlemen. Which brings me to my comfort. Why it's like, all right, fine, destination's unchanged. You got all this volatility in the crypto market. What the hell are you going to do about it? There's nothing else to do. There's nothing else to invest in, according to the way I see markets. There's nothing even remotely interesting or reasonable that could potentially achieve anything like you could imagine or hope for in the future. This just doesn't work. Your 401k is not going to do what you want it to do. It's a pipe dream. Your mortgage from the bank for a real estate investment, You're so lucky if the Airbnb works out. Lucky if you get the mortgage, if you have the down payment or the collateral. It's just not an activity that I find even remotely possible to achieve what you're looking to achieve. Hope it helps. Asun's in the house. Hello, my friend. Hope you're well. Can you tell me about Zunami? I don't know anything about Zunami. Let's take a peek, though. Take a peek. I have no idea what it is. No idea. I saw a llama. Omnipools. I remember now. Conic. Conic. That's it. Okay. I don't. Conic. I probably shouldn't have bought the clip that I did because it's down like 95%. That was a 30 chip that turned into like 2 grand. So omnipools, I think, are big in the future. Clearly, it makes sense. It's like a banking type of product. It's like a money market. Deposit capital, and it just seamless cross-chain liquidity provisioning. It's still a very big idea. It was part of my 2021 thesis. But what it reminds me of derivative. Like just as I talk about derivatives and how I don't want exposure to LSDs, liquid staking derivatives, I'm like base layer, great. So the point is, what is Zunami Conic to me now, and how I'm becoming increasingly rigid, um, additive, ancillary, supportive of the base layer. This is what you want to see. You want to see 50 Zunamis, 50 Conics, 50 stake DAOs, 50 convexes, and you want to see protocol, entrepreneur just coming online and trying and building and failing. Base layer. That's my sentiment. That is my opinion, my friend. Hope that helps. Snoke, if you're managing a small portfolio, let's say 20K, would you redefine your definitions? Could elaborate more on your different approaches and thoughts with this circumstance. Aha! The reality for the vast majority of persons that probably listen to me, and the reality for most people on the planet. Yes, it'd be a very different perspective, and probably the perspective that I think about when I have this type of conversation is my kids and time. So I wouldn't think about necessarily investing. Investing really requires like a critical threshold. So I think in terms of cash. And zoom TF out for 8-12 years, especially if you're in your 20s. Man, you're in your 20s, you graduate college or whatever. You literally, I'm like, if I was 20, I would get a job at Best Buy and maybe a second job, and I'd make a deal with my parents like, Mom, Pop, I got a great idea. And here's the deal. And I build a PowerPoint or something if I need to convince them of the shit. And I'm like, I'm going to stay at home. If you need me to, I'll fill the fridge a little bit, but if you don't mind, I got a really great plan for 2030. So let me stay at home for 10 years. And I promise that every dollar that I make will be invested. And you are able to invest it all. That would be insane. And we're talking about like a standard middle class job. Best Buy, Geek Squad, or something simple. And maybe not even college. Maybe 35, 40 grand or whatever the heck they're paying at restaurants nowadays. Chipotle is a standard job, an average job. But you make that deal because it's the expenses that fuck people over. It's not the income. It's the expenses. It's mom and dad, I'm 18. It's time for me to move out. And it's going to be all downhill after that. because that those numbers don't work anymore. Making 20, 30, 40 grand a year, moving out in the U.S. numbers don't work. But making 20, 30, $40,000 a year, 10 years, compounding in the cyclical appreciation that we experience in crypto markets, literally just sticking to cash. Bitcoin, Ethereum, you're diversifying the Solana, you got some Atom, you're staking your Atom, and all you're doing is just buying, buying cash. Shit that you could sell at a market top in 2032, in 2036. Then you can start thinking about investing. So that's probably my sentiment. And maybe I get a little, not nostalgic, but I kind of, I wish that I had my brain when I was younger. I think anyone kind of wishes that because that sounds pretty interesting. Because I'm an autodidact, I could teach myself anything. And nowadays with ChatGPT, I'm like, all right, mom and dad, I got the high school degree, love you, I got a plan, and it's awesome. I'm gonna every 6 months I'm gonna study something different, and I'm gonna report to you. This is what I'm gonna study. How do you learn it? How do you learn it? You have access to the history of the world of information and a personal teacher. And I mean, this thing is insane. This changes everything. The conversations I have with ChatGPT are insane. I would never be able to tell an earlier self the things that I do nowadays. No one would believe it. So study something different every 6 months. Maybe teach yourself the program. Read some ancient philosophy. Study some law. I mean, you got 10 years. Mom and dad, at 10 years, I'm going to study something different every 6 months. And I'm working at a job. It's a nice job, respectable job, Best Buy, doing tech shit. Mom and dad, you know how you love tech shit. You know how I fix your computer every week, mom and dad? Now I'm going to be fixing other people's computer, and they're going to be paying me. And mom and dad, I'm going to invest it all. And I got the right investment ideas. And by 2030, I'm going to impress you. So that's probably what I think nowadays that I wish I could have done in an earlier life. And I think a lot about my kids because of the world they're going to grow up in. It's going to be so different post 2030. It's going to be so different. And it's very hard to talk to my wife about what I see post 2030, of how different the world's going to be. The whole institutional educational thing. Anywho, I hope that helps. I don't want to do too much on that. I do have some other things to work on, but that's a very passionate topic for me because I think of my kids and obviously I think of my former self and how much time I wasted over the last 2 decades. I would highly appreciate if you could share your different train of thought on small portfolio. I think that covered it. Any thoughts on the second part of the decade? What can you say about this time horizon in the next following 5 years? After 2030, what is work? That's probably where I'm at. What is it? What is work? What is school? What is education when you could, because this is textual conversation. We've seen what's going on with imagery. What is it when you could literally log in, not even log in, just open it up and you have a person. It looks and talks like a person. And it has this type of intelligence. And you're literally talking to it about anything. And it's having a full-fledged conversation with you. And you cannot distinguish between it and a person. It is a person as you're consuming the conversation. What does that mean for education? What does that mean for everything? Changes everything. And that is obviously just a mere stone flick or whatever. It's right there, considering what we could do here and what we're seeing with images. Future's going to be weird. I'm here for it. Hope that helps, my friend. Killis, good morning. Hope you're good. Just show. Uh, Exactamente. Time is a young, priceless asset. Need to follow your advice, wisdom of the wise, like the captain, parents, etc. I mean, literally, the reason I'm so comfortable talking about these topics is because they're just rational. They just make sense. It's deductive analysis. How can I achieve what I want to achieve? And then you do your due diligence. It's mathematically impossible to do it with work. It's mathematically impossible to do it with equity markets. It's mathematically impossible to really do it with real estate. And it is mathematically possible with crypto, albeit, it's only existed for 4 years. It's brand new. But it's the only thing that's even mathematically possible. It's the only thing that even remotely seems like it can happen. And that's my sentiment from a 41-year-old whom has had a hell of a ride. I worked my ass off when I was in my 30s. Jesus. I often think to myself, did I make a mistake? And then folks will always remind me, I am who I am because of the shit that I did, and I wouldn't be thinking the way I do today if I didn't do the things that I did. I did have fun along the way. I went to England once, South England, Brighton, working for American Express. That was fun. My favorite one was Universal Studios. I got to say hello to Optimus Prime every morning for a year, and I just literally had lunch in the park. You just walk in, and just go on your rides. You can do whatever the hell you want. You're in the park all day long. That was fun. What else was fun? I worked for this startup up in Canada. I didn't go up to Canada. It was a remote job back in like 2019, pre-pandemic, and it was some of the best software that I have ever seen a contract firm ever do. That was insane. The cleanliness and the structure of that software was insane. Never seen anything like it. It's been an interesting ride. So, never regret the things you've done, I guess. Adjust going forward. I thought a concept. Hi, Cap. Always a pleasure. All right, ladies and gentlemen. The captain is going to go back to the real world. I appreciate everyone listening to me today. 159 human beings on the planet Earth have found that capacity to sit and listen to a dose of rationality for about an hour and change. It is always a pleasure to do what we do. It is a Wednesday, so tomorrow's Thursday, and between today and tomorrow, I'm pretty sure a lot of folks that listen have paydays, so that's always a nice part of the week. And I will see you guys later this week on a Friday. So until then, I wish you all a good one. See you then. Peace.